Hello, everyone. Welcome back to the Rational Investors Daily Brief Recap. It's about quarter past the hour here, so let's try and do this 10-15 minutes. Give you just a simple overview of what it is we're seeing in the market today, and a little teaser to get you maybe interested in participating on the site through our full Daily Brief broadcast. So, without further ado, let's hit the charts and see what we got. I started off today's conversation with the site people, reminding them this is the last week of August. Keep in mind, most of the sort of professionals in the marketplace, they're still on vacation, and even a lot of trading desks and stuff. They get really, really thin around this week. Some people sneak out a little bit early. So my hunch is, the volatility in the market might be a little bit choppy. Volumes themselves very light. In fact, through the Daily Brief, I did a visual sort of presentation of what the end of August often looks like for Bitcoin. Let's see if I still have that chart up here somewhere. So I did some September studies, and you can clearly see that heading into the end of August, trading volumes generally back off and things lighten up, and then we head into September and all hell breaks loose. If anything, we did have a few years where we did have up Septembers, but notice that the volume was actually ramping into those events. This is the only one that's sort of an outlier. I think you could maybe say that the volume capitulation spike was over here in early August that year. But nonetheless, on balance, I see that, heading into the end of the summer, even Bitcoin's volumes itself often are a little bit choppy. So, we do need to understand the context of market state right now. We did have sort of a political bombshell come out of Great Britain overnight. The leader there said that he was thinking about suspending Parliament around this Brexit event just to make sure that the hard exit goes through. And of course, all the politicians in there are all up in arms. We've talked at length on the site about how we're not really that enthusiastic about European currencies. And through the Daily Brief, we took a look at the British pound and the euro and stuff, and they're still working their way lower. So it shouldn't really surprise us to see US dollar index right back up at the top end of its range. And then we'll talk a little bit about risk on, risk off. Japanese yen, of course, is pretty much a risk off proxy right now. So if it comes off with European malaise, then you get this sort of perfect storm for the US dollar index to work its way higher. If anything, probably on the weekly charts, hopefully everybody looks at this and sees a nice little diamond pattern forming here on the US dollar index. So if we did finish this week here today, this week would actually paint an inside bar. And, coming out of the holiday, all the pros back following Labor Day weekend, we could very easily see a major sort of resolution of this market. And I've been sort of talking at length recently, and I'm still seeing higher highs and higher lows here on the US dollar index. So until this thing actually does break down, I have to be thinking US dollar up. And then given our conversations about what's going on in Europe, I think that makes sense considering the euro is something like about 35% of this US dollar index. Moving on, just a quick conversation about risk on, risk off. Bonds seem to be moving higher, but I did notice that the gold and the yen, let's see where the hell that chart is. It's around here somewhere. There it is. Yen coming off here a bit. Remember I just talked about US dollar index. Gold's pulling back here a little bit. Bonds, of course, still moving higher. Absolute train wreck there, for those people chasing yields. And interestingly enough, I actually think that we can make the argument now, yield curve inversion. We now have all of the yields below short-term interest rates. I haven't seen Mr. Murphy's site actually print a yield curve inversion. I think what they're looking for is they want to actually see 30-year and 10-year yields below these 2 and 5s. I don't know, but the simple message should be here that financial institutions borrow at the short end, Fed funds, euro dollars. They lend out on the long end, home mortgages, car loans, that kind of stuff, business loans. And basically now the Fed has basically said that this sector is guaranteed to lose money. So This is sort of the harbinger. It is the most accurate predictor of recession out there. And my hunch is I can now officially join the camp where I do believe the financial services sector, it usually takes about 6 months for this information to hit the balance sheets and to start to be reflected in earnings statements. But I think at present right now, we can comfortably say that the financial institutions are probably going to lose money on this yield curve situation here down the road, which of course is a harbinger for recession. So the message, the writing is on the walls. Moving back to our charts here. With regard to risk on, risk off, I was actually quite surprised. The EIA came out with a inventory, and they showed just an absolute massive drawdown in crude supplies. I was actually pretty shocked at the number myself, to be honest with you. Came in at minus 10 million barrels. Jesus. When the market was only looking for a drawdown of 2 million, or the better part of 3. That's a pretty big miss. Is it a function of this sort of fake news kind of world we live in? I don't know. But I did see even gasoline stocks were down very big numbers, down to, 2 million barrels. So, maybe this starts, I've been sort of watching the risk on, risk off kind of equation. And I noticed, if you think about stocks and, is Bitcoin part of the risk on or risk off scenario? In this scenario, we're considering it part of the risk on scenario. It's caught a bit of a bid. And of course, I think crude actually, people probably saw these numbers ahead of time. And its price started to get bid up overnight, and it sort of started to lead the charge of sort of risk-on conversation. The only problem I have with this is, of course, you can see this big M that's working in the marketplace. Yes, we did W here, but is this just a counter-trend rally for the pros to come in and short against these highs? Tough to say right now. And then also, too, remember holiday weekend, all the, late August. Little bit of funny business in the marketplace. We talked about, potential market manipulation. And of course, the last thing with all this is we're only one tweet away from all hell breaking loose here. So, be cognizant of that. It looks to me like the risk on proxy is back on. And I even challenged our TRI SOF crew. We have our weekly options meeting. Tonight's going to be our weekly options meeting for our veterans. Maybe we should start hunting for ideas to take advantage of potentially a rally back up top in the crude market, because like I said, this market, like gold and crude usually move in opposites, and you can sort of see gold bull market, risk off, proxy, energy market literally has been working its way lower through that entire period. Risk on is off. And let's see whether we get any follow-through traction on that pretty big drawdown on the EIA stocks. Tough to say right now. Do we maybe take a bit of a jaundiced eye considering it is the end of the summer? Tough to say on that too. I've made the argument that I don't really like the idea of buying gold up here. I do understand short-term traders. We talked yesterday about bot trades and all that kind of stuff off lower time frames. But I'm actually starting to go and start shopping for silver put options right now because I think the market's gone maybe a little too far too fast. We'll talk about that maybe another day. Okay, so moving on, really good example. My co-host here, who's driving the bus out of Albuquerque, we're constantly at TRI looking for trade ideas. This happened to be one of his ideas that he was hunting last week. Hopefully everybody, especially if he changes to like a line chart, hopefully everybody can see the W's coming in on these markets. Whoops, not that one. Let's go there, and then let's go there. Yeah, there we go. So, choppy W's. I'm not going to sugarcoat it, but nonetheless, you can see, names are performing. Trend line breaks, structural signals on the other side of trend lines, big volume on the upside today here. And I was really pleased to hear that, Kevin, I think he's turning into one hell of a stock picker. And yet another idea of sort of a non-economic sector. Remember I said yesterday that, maybe the pharmaceutical stocks is sort of a safe place to hide if we are potentially going into recession, a la yield curve kind of conversations. And I can see pharma names are starting to perform here. So just yet another example of a great stock pick. Congratulations, Kevin. Hats off. Just keep on doing what you're doing, dude, and you're gonna be so stinking rich down the road. You just keep on keeping on. I suppose we'll finish off today's conversation with just a quick boo, of course, at crypto. FYI, I was a little disappointed in myself in that I did have a valid trade setup that's in one of my trading plans come in here recently, and I put a tweet out to this effect last night. And of course, as always, if I put out sort of a bearish call on things like Bitcoin, it never gets received well, and people hate me for it. But, a setup is a setup is a setup, and you can see A, B, C, D. If this thing does crap out, then I'm actually looking for a tag of about $8,000 here. Probably more important to this was that, if I do, number one, I really want to be a demonstrator of best practices for, both the site members and my students on the site. And for whatever it's worth, we have a new school term starting up in September. And if you need help building trading plans and, wrapping your head around dealing with anxiety and emotions and how that can be reflected in your trading, and learning what setups look like and what kind of setups speak to you, all that kind of stuff. Our new school term starts in September, so feel free to reach out to us if you have some questions with regard to that. But the point here is, I have a trading plan on OKCoin that basically is a bot setup trading plan. And as you can see, A, B, C, D, if this bearish continuation trade plays out, then I'm going to be looking for like $8,000 on the downside for Bitcoin. I have no idea if this is going to work out or not. It is a setup. It is validated. I had momentum divergences come in. And as you can see, I've got multiple highs to risk against. I even like the fact that there was a nice FU move here against these highs to basically wash out the weak hands. But of course, botters have their stops up here. So now we've got 1, 2, 3, and actually we even got 4, 5 different highs. And of course, you can see the little M that came in. And there is the bot trade level. So I was very wrapped up through the end of July. I had to move my home. We had also the big TRI meetup. I got into a fender bender car accident. So my trading per se has been a bit sloppy of late. It's just, it's the way life goes. Journal, try and work your way through it. And I was just like, I got to get back onto trading these setups. I just got to do it. So long and short of it here last night, I was looking at this market and I just said, there is the bot level. Just get that damn trade working. I put the order in and I got my fill through like the London kill zone last night. Again, I have no idea if this trade setup's going to work. It's in my plan. It's vetted. I've got lots of highs to risk against, and I'm just going to work the trade, and if I get stopped out, I get stopped out. Next bus in 10 minutes. But full disclosure, I have got a short working from this bot level, and we'll see what happens. So that's sort of, like how I sort of preface the crypto conversation right now. Also, too, and I think I just made reference to this very quickly earlier, but I noticed sometimes Septembers can be very cruel to Bitcoin. So I'm kind of feeling like I want to play more defense than aggressive offense right now. Market state, it's tough right now, right? Unfortunately, the bull died in late September, late 2017, early 2018. And I don't think we've actually officially turned back into an official bull market in crypto. I think I've been talking to you, the public about this kind of study. I am looking for the market to work its way back down into reload zones here. There's lots of sort of confluence of GAN studies and stuff that suggest we could probe the 8,500 level here in through the end of September. So we'll see how this bot trade works. I don't know whether it goes cranking straight down there or it goes sideways for the next month and then dumps. I really don't know. But the setup's in place, and hopefully you can understand sort of what I'm thinking here going forward. We had a really great conversation today with a gentleman from Bravado Trading who has taken the TRI education program, and I think one of the reasons why he's done well at Bravado is that he's really sharp trader now. Works, of course, with trading plans, risk management, setups, yada, yada, yada. And we asked him to come on the show today and just tell us what he was thinking. Had lots of conversations about things like dominance and stuff like that. We talked about that yesterday. But he also mentioned, and I thought this was a really interesting catalyst for us to keep an eye on, but he mentioned that sort of middle of September, we have a pretty big catalyst coming up here on this BNB with their U.S. regulators and can you stay on Binance and all that kind of stuff. And we sort of threw around the idea that maybe we were going to get some sort of capitulation dump on this BNB. And I actually think it's not a bad catalyst for us all to be thinking about heading into that event. So, I'll just leave you with this thought. We took a look at this BNB. You can see it's making lower lows and lower highs. There's really no reason to be a buyer just yet. But if anything, now we have a bit of a catalyst that we're going to be watching for. Interesting harmonic that might play out that takes us right back down against these key lows. And if anything, we're at, we get down into this area, we're going to be starting to hunt for signs of divergence. Do we get any sort of structural signals, fractals, those kind of things? Maybe even if we're lucky, a big fat W to sort of mark sort of the way we sort of talked about this in the class or in the daily brief today is maybe this is sort of like sell the rumor, buy the news scenario. I could very easily see that scenario playing itself out. So with that, I think I've talked way too much today, but enjoyed the presentation I gave to you guys. I hope you guys liked it out there on YouTube. Have yourselves a great day, everybody. All the best, and bye for now.